And welcome back. Well, when the end of a year approaches, many of us take a look back and assess what needs to change. That's why now is the perfect time to review your money choices and consider making just a few adjustments. Jerry David is a wealth management advisor with Prescient Financial Solutions, part of the Leader Financial Group with Northwestern Mutual. Good morning to you, Jerry.
Good morning.
Thanks for joining me. Let's chat a little bit. Right now, I think it is just such a volatile time. People are a little nervous. What are you hearing from your clients right now?
Well, everyone's concerned about the election, and understandable, but if you look back in history, going back to the 40s, the market really will deal with whatever president gets in, and therefore it does what it does. So we've been trying to train people just to be calm, and volatility is just part of a presidential election.
That's exactly, yeah. You got to stay steady, right? You got to stick there and wait things out for the long run. At least that's what I hear everybody say. So let's talk a little about a Roth conversion and why you would suggest that someone execute a Roth conversion.
Well, considering the Secure Act that was passed in December of 2017, these new tax rates now effective 18 to the present, the marginal rates are really the lowest we've seen in a long time. So for people with taxable incomes in this marginal 12% bracket, either working or taking retirement distribution mode, that the brackets really should be managed to maximize this low tax bracket. So for example, if your current 2020 taxable income is estimated to be below the upper limit of the 12% marginal bracket, and you have no long-term capital gain exposure, then it may be advisable to convert a portion of your pre-tax IRA to increase your taxable income for 2020 to the upper limit of this 12% marginal bracket, thereby locking into this 12% tax bracket and allowing all the future earnings to go tax deferred in a Roth IRA. So later you can take tax-free withdrawals when you might be in a higher tax bracket than the 12%. You may want to talk to your tax professional to determine what you owe, deciding on how much to convert.
Is a lot of that because you think taxes could be higher in the future, or is that not really part of it?
That's a lot to do with it, mainly because the 12% marginal bracket is very low. And even people with a fair amount of wealth, everyone starts the year off at retirement really at the bottom tax bracket. So even wealthy people do pay some lower taxes. And so there often is a question is, if you can get money out of an IRA at a 12% rate, why not take advantage of that? Because really the delta is the arbitrage between a current 12% and a future rate. So the only reason this would not be a good idea is if your future rate would be less than 12%. And I just feel that even for every one of these lower brackets, that it's going to be hard to pay less than a 12% tax, as we've seen in history. So therefore, if you can lock into 12%, then all we're banking on is that you'll be in a higher rate or the same later. Then it's a neutral thing to do. So we do recommend conversions maximizing this 12% bracket.
And that's what I love about what you guys do. And I know you're a rock star in the wealth management world. And so I think it's one of those things that, you look at all that history and you've got all that data there, something that us, the average person, don't have at our fingertips. And so you really can help us predict and look at what the world has shown us. If somebody's inclined to do some charitable giving and they want to give to a reputable 501c3, how do you recommend people go about finding the right entity or the ways to do that?
So we think there's really three main ways to when you're charitable inclined. And number one, donating appreciated securities. And so when you have investments, instead of donating cash, which is very simple, we find that this is a common mistake with a lot of people that we meet. And if you actually would donate something with the highest long-term capital gain, so a great example is anyone who's really investing probably owns a few shares of Apple stock. So a great example is if you donate the actual shares to the charity, to this charitable entity that's qualified, and they would actually sell the shares, they pay no tax, and also you don't have to pay the tax. And so you can take your cash you would have normally donated to the charity and buy the stock back again. And basically you get a tax deduction for your donation if you are actually itemizing, and you get to skip paying the tax on the appreciation of the stock. So it just makes a lot more sense. Why not take advantage of more tax deductions by donating appreciated securities versus cash?
I've never heard anybody talk about that.
Yeah, and we see often people have a lot of gains, especially wealthier people that have a fair amount of net worth that are very charitable inclined. And we see this very often. And I just think it's a little bit maybe lazy in regards to, the accountants really don't know that they have appreciated securities, and often the person managing their money maybe doesn't realize that they're charitable inclined. And so it just needs to be proactively kind of questioned. Another great way, Tiffany, is that a qualified charitable distribution, it's called a QCD. This is relatively new. It's been out for maybe 4 or 5 years. And that if you're 70 and a half or older, and you take a distribution directly from your IRA to this qualified charity, there's no tax on that. So therefore, when people talk about with this new tax law passed in 2017, that they don't itemize and therefore they're losing this charitable deduction, well, here's a way for somebody who wants 70 and a half that can actually donate, you could say, pre-tax money to the charity.
It's fantastic. We ran out of time, Jerry, but I know you talk about rebalancing and definitely doing that at the end of the year. So I want to make sure everybody's got your information so they can do that with a professional like yourself. Thanks so much for joining us.
You're welcome. My pleasure. Have a great day.
Appreciate it. You too. The Leader Financial Group is proud to be the main sponsor for a virtual event coming up. It's called Design to Inspire, which is a benefit for Women for MAC. It's happening on Wednesday, November 11th. To register, you just go to eventbrite.com and search for WMAC. That's Women for MAC. All right. And if you want to learn more about the Leader Financial Group, go to downtown-mke.nm.com, or you can email or call Jayla Sullivan. Her number is 414-840-1665, and her email address is jayla.sullivan@nm.com. Jayla there spelled with 2 A's.